Welcome to Tesla Daily. Here's what's happening in the world of Tesla and Elon Musk. First up, Elon Musk has shared some updates on the AI5 chip development. Then, there are growing concerns about Tesla's valuation, especially with demand starting to decline. In response, Tesla is shifting to a subscription model for its full self-driving feature. And let's not forget, competition is heating up as the EV market continues to grow. Lastly, the Boring Company is looking into a new tunnel project near the Tesla Gigafactory. That's the latest. Let's dive into some updates on Elon Musk and Tesla. First up, the AI5 chip development. Musk recently shared on social media that the design is almost done. This is a bit different from what he said 6 months ago when he claimed it was finished. So, it raises some eyebrows about his timelines, especially since the production of the AI5 chip has now been pushed back to mid-2027. This chip is really important for Tesla's upcoming vehicles, like the Cybercab, which is set to launch in 2026.
If the Cybercab ends up using the current AI4 hardware,
it might not live up to Musk's expectations for the AI5, which he says will be up to 10 times more powerful. These shifting timelines could shake investor confidence and challenge Tesla's ambitious goals for autonomous driving. Next, let's talk about Tesla's valuation concerns. Right now, Tesla's stock is trading at some pretty high multiples, 111 times its forward free cash flow and 270 times adjusted forward earnings. Analysts are starting to question whether these numbers are sustainable, especially since demand for Tesla vehicles has dropped over the past couple of years.
Despite earlier hopes for rising sales, Tesla has had to offer incentives just to boost demand. This suggests a disconnect between what the market expects and what's actually happening. Plus, the company's profitability has been under the microscope, with negative growth across all margins for the last 3 years. Investors are left wondering if Tesla can keep its high valuation without clearer revenue visibility. Moving on, Tesla is making a big change with its full self-driving feature. They've announced that it will now be available only through a subscription model, priced at $99 a month. This decision aims to address past complaints about transferring FSD purchases to new vehicles, which frustrated many owners. By switching to a subscription model, Tesla hopes to boost user adoption of FSD. This could lead to more data collection and improvements in the technology. Ultimately, it might help them reach their goal of achieving unsupervised self-driving by gathering more real-world driving data from a larger user base. Now, let's look at the competition in the electric vehicle market. Other automakers are stepping up with attractive financing deals, including 0% interest offers on various EV models. This comes at a time when Tesla has seen a decline in vehicle deliveries for 2 years in a row. With brands like Chevrolet and Ford rolling out competitive financing options, Tesla could face more pressure on sales, especially for the new Model Y Standard, which hasn't met sales expectations. The growing number of discounted EVs might tempt potential Tesla buyers to explore alternatives, impacting Tesla's market share. Lastly, the Boring Company is exploring a tunnel project near Tesla's Gigafactory in Reno. They've been commissioned by Western Nevada officials to conduct a feasibility study aimed at easing traffic congestion in the Tahoe-Reno Industrial Center, where both Tesla and Panasonic operate. Local officials are on board with a private solution to improve transportation safety, but the project still needs state-level approval, which is uncertain at this point. If it moves forward, the Boring Company's involvement could enhance Tesla's logistics and operational efficiency in the area, but the timeline for this project remains unclear. And that's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a quick reminder, this is all for information purposes, not financial advice.
Catch you in the next update.